Hello, everyone. Welcome back. So today again, a new topic. It's, as you can see from the title, it's bullish 1, 2, 3 pattern, which I'm going to talk about. So the reason that I have kept the title as super bullish is because this pattern is very reliable, provided that all the environment is in favor uh, of the bullish setup. If that happens, that patterns become very reliable, and it's a very common pattern. It occurs very frequently, and so if we are aware of the pattern and how it sets up, uh, you know it would become very easy to take the trade and create the position. So before that, before we go ahead and talk about the pattern in detail, which is the topic of today, let me just uh, tell you something about myself. So this is me, Rohit Dwivedi. I've been trading for a while now. As I have mentioned before, by definition, I'm a pattern trader. So I basically read the price action, and then I try to spot the patterns, bullish or bearish. And as per my rules, if everything sets up, I go ahead and take the trade. So for me, what is more important is the price action, and the reliability of the pattern, the quality of the trend. Okay. And what I do not consider while trading are the indicators. So I'm sure that so far, if you have seen my videos, you will not see any of the indicators on my charts except the moving averages. However, moving averages are also very subjective in nature, as I have mentioned. But the only purpose that I have, that I use them is because they help in speeding up the analysis. So if you open the chart and the market is in trend, the moving average will give you the instant picture. So that's about me. Let's go ahead and talk about the pattern. Although I have kept the title as super bullish, but that doesn't mean that this pattern works 100% of the time. No, this is not the case. Like other technical setups or indicators, or whatever strategy you follow, they do tend to fail at times. There is no strategy in the market that works 100% of the time. So keeping that in mind, let's move ahead. So as the name suggests, it's bullish plus 1, 2, 3 continuation pattern. So which means that we will take the trade based on this pattern when there are two things. First, we are in a bullish market, and second, there is a trend which is already established, and after the trend, the prices rests for a while, and then this 1, 2, 3 pattern sets up, and then we go ahead and place the trade. So let me describe you that how the setup forms for this pattern. So if you are not aware of what is a setup, then a setup simply means that a set of rules, like what time is it in the day, how much is the volume, what moving averages are indicating, what other markets are doing. and what is the current price action, where is the support and resistance. So the multiple of things, when they all come together, we call it a setup. And when the criteria meets as per the pattern setup, we go ahead and place the trade. So for bullish 1 2 3 pattern, the setup starts with bullish wide range bar. Now you may ask that what is a wide range bar. So mathematically, we do not measure the length of the bar. It just means that we will eyeball it, and if the length of the range of the bar is clearly visible compared to last 10 or 15 average bars, that means that it is a wide range bar. So the setup says that a wide range bullish bar should form out of a consolidation or a base. So that means this trend has already established, prices have they are making higher highs and higher lows, and then they form a resistance or a base. And if that base is near or just below the prior resistance, that is even better for the setup. So if prices make higher lows, and then they form the consolidation, and from there they break out, and the breakout bar should be a bullish wide range bar. Then after the wide range bar, or in short I call it as a WRB. So after the WRB, there is a inside candle, an inside small candle, and preferably it should be a red candle. So what does the inside candle means? That after forming a big wide range bar, there is a small red candle, which is also a consolidation or a small base in the lower time frame. So for example, if you are taking a swing trade, and prices have broken out from a consolidation, so after a wide range bar, if it's a small day, if it's an inside candle, and if you go to the hourly chart or a 15-minute chart, you will see range consolidation. So that consolidation should be at least in the upper 1/3 of the wide range bar, or maximum 40%. So in short, that inside candle should be less than or up to 40% of the WRB. So after the inside bar, the prices should continue, and that is why we call it as a 1 2 3 continuation. So that means that the first bar in the 1 2 3 continuation pattern, the first bar is the wide range bar, right? Then the second bar is the inside red candle bar, which is a very small range candle, which is also a consolidation in the lower time frame. And then the third bar is the continuation bar, which means that the prices have after forming the first higher low, they have again started moving up. So after the third bar, we should also see that there shouldn't be any kind of resistance to the left. There should be a clear void. So in short, the setup is that we should first have the wide range bar, then a small red candle bar, which is also an inside bar, and then we have the continuation bar. Also, there shouldn't be any resistance to the left. When the third and the continuation bar happen, if it has a high volume, that would be a plus. So once the setup is formed, and once we are very confident and very clear that yes, this is the setup and we are ready to take the trade, so now let's talk about how to enter in this setup. So what we have to do is, after the red candle, we have to buy over the WRB bar, which is the first bar, right? So I call it as a igniting bar also. So igniting bar means that the prices have initially, they have bottomed out, they made some higher high, higher low, and then they broke out. So when they broke out, that was the ignite, they are igniting a new move. So that WRB is also called igniting bar. So after WRB, there is a small bar, and then there is the third continuation bar. So when the third continuation bar will take out the high of the WRB, that is where we have to enter into the trade, right? So after entry, the second important question, where we should place the stop. So the stop should be below the WRB, or we can also place the stop to the recent lower, lower high. So if there is a pivot low just below the WRB, we can place our stop there as well. So this was the setup, and this is how should we enter into the trade. Now let's move ahead and just check some couple of examples, so that you will have a very clear idea how to trade this reliable pattern. So this is the daily chart of Asian Paints. So if you can see, I have marked two arrows, and I have labeled them, both of them as plus 1, 2, 3 continuation. So what you can see here is that the first wide range bar did not perform well. Okay, and we have not taken the entry, or we should not take the entry after the first wide range bar. Okay, why? The question would be why. So just think about it. Okay, so there is no doubt that the first wide range bar is also a valid setup. It has formed igniting WRB, and it has cleared the resistance as well. But if you can see, after the wide range bar, there is the second bar, which is an inside bar. Now the setup says that after the second bar, we will take the entry when the third and the continuation bar would take out the high of the WRB. Can you see that here? No. So the third bar has even taken out the low of the second inside bar. It did not take out the low of the high of the first igniting WRB. And that is why we have not taken the trade here. Now, if you go and see the second WRB, that is where the trade has worked out. So again, we have a wide range bar, and this is even a bigger wide range bar, which has taken out the high of the previous resistance. Then we had the second bar, which is an inside bar. Now this inside bar is technically not a very good inside bar, because it should be that the high and the low of the inside bar should be within the first third range of the WRB. But in any event, the bar is strong, it has the volume, it has taken out the resistance, and we have the rising 20 and 50 period moving average. So no, the setup is fine, the environment is okay. And if you see, the third and the continuation bar has taken out the high of the WRB. So the moment it has taken out the high of the WRB, we are into the trade, right? And as I said, if you can see, let me just try to find some drawing tool here. Okay. So if you see, the moment this third candle has taken out the high of this bar, this is where we can take the trade. Right. Now, as far as the stop is concerned, either we can place our stop here or the recent low, the pivot low. We can place our low here as well. Just give me a moment. Yeah. So now after this, once we are into the trade, you can see that prices have after resting for a day or two, they have started moving up. So now let's go to the next example here. Yeah. So this is the daily chart of ICICI Bank. Now, this is a very good example. You can see that the WRB bar has taken out the high of the consolidation, the all the previous resistance it has taken out. It has the volume as well, which is a plus, and this is a perfect inside candle. Now, after this candle, we did not have, that the trade is not triggered because the third bar did not take out the high of the first bar. So we have to, wait a little on this setup, and it has actually 1, 2, 3, 4, and fifth. So on the fifth day, it has taken out the high of the WRB, and that is where we are into the trade, right? So can you see that this is really this was a light bulb moment for me when I started reading the price action this way. So we do not need any sort of indicators or oscillators to take such simple trades. They are very if you just consider, and if you just focus on the price action and the message they are giving, it would be enough to take the successful trades. So with that, let's move on to the next example. So this is a daily chart of Bajaj Finance, and if we can see, in this chart, this is more like a bottoming pattern, which it has formed. So after the market has fall for a couple of days, it has made a range here. So if you can see, it was it's a multi month consolidation, if you can see here, and then the prices broke out, right? So after this, we have some resting days, and then we have this bar. Now technically this is not the igniting bar. This is a wide range bullish bar, but this is not the igniting one because it hasn't taken out the high of these candles. However, as I said, we have to use the price action, very logically. So when this bar, on this day, if you can see at the open, the prices gap down and they open somewhere here. But then eventually during the day, the buyers stepped up and they, taken the, prices all the way to the up, and the prices closed at its high. That shows that, bulls were very aggressive on this day. And if you can see, we have the, the volume also. So this was, a very bullish bar, and this is enough to give me the message that it is sufficient to go long on this market. We can place the stop below here. We have the perfect inside day, right? And then we have, on this day, we have the bar, the continuation bar, which has taken out the high of the WRB. And this is where we were in the trade. So again, this is the, now, so far we have talking about the swing trading and the higher time frames. The same pattern can happen in any time frame. So this is a 5-minute chart of Pidilite. So if you can see, this was, the prices have broke down here from this range, right? This was a range which it has formed, and then prices broke out. However, after breaking the prices to the downside, it did not have the follow through, right? And then from this candle, which made the new low, which means that there must be people who got trapped here. After this bar, it has made the igniting WRB bar, which has taken out the resistance, and it closed at its high. Then we have the inside bar, and then on the fourth day, we have again a bullish bar, a continuation bar, which has taken out the high of the WRB, and that is where we are in the trade. Now we can place the stop here, or we can place the stop here as well. If the stop is wide, as I mentioned, we can share size it accordingly based on your risk reward, the risk which you want to take per trade. You can share size it accordingly. So if you can see, what this guy is thinking about. So this guy is thinking about that maybe I should have known such way of reading the price action before. I could be more successful as a trader. And yes, that is the fact, right? So what we do is we basically we are very much dependent on the indicators and oscillators, and then we try to find out the entry when the indicator any technical indicator gives us the signal. Whereas we know that most of the technical indicators are lagging indicators, and the moment when they give the entry, prices have already gone up. So I do not use the indicator based methodology in any of my trading, be it intraday or the swing trading. My main focus would always be on the price action, and with a little bit of practice, and what I'm teaching you here, if you just practice it, you will be able to see that that your trading will change very soon, and you will be able to read price action the way we should do it. So let's move ahead. So as I said that the pattern works in all the time frames. So this is a weekly chart of LNT, right? So we have seen the pattern in the daily time frame, in the 5-minute time frame, and now this is a weekly time frame. So what it did is that, again, a wide range bar, igniting, taken out the highs, cleared the resistance, and it closed at its high. So now from all the past examples that we have seen so far, you know, the important point, which, I haven't said earlier, that if, the price closed at its high, that's a plus. So whenever there is an igniting bar, it should also close at its high, because that shows the strength of the buyer on that particular day. So then we have the inside bar. Technically not a very good inside bar, because it has, it is spiked up above the high of the igniting bar. But anyway, it closed, the body is still inside. Then we had this bar, and on this day, it looked that, this pattern is not going to work, because the bar was, at its low. It was, it's low when it was forming. But if you see, it has, when it reached to the prior resistance area, and, a higher high, the higher low before the higher high is called as a minor support. So when prices reach here to the minor support area, buyers again stepped up, and, they have taken the price back up. And, this day has actually confirmed that this pattern is, going to work, maybe next day or the day after. And then we have seen that after, the 1, 2, 3, 4, and on the 5th day, we have the continuation pattern. And, technically we were in that trade on this day, but from the 5th day, the prices have start moving up. So with that, let's call it a wrap. Hope you have liked the presentation. If you are gaining some knowledge from these videos, please subscribe the channel. Please like the videos, that will motivate me. Please share, my YouTube channel with your friends, so that they will also get, benefit from the topics that I am teaching here. So with that, let's catch you up in the next video. Bye for now.